commodities are very cyclical and they come and go, and you have to be patient and wait till the bottom comes back, and then you can ride the wave again. And now that's happening. So all of their patience, and certainly quite a few of them lost money, and everyone lost money in the bear market, but the chance to do it again, everybody sees that. Everybody's so excited about it. It really adds a lot of new energy to the sector.
The stock market crash brings ripe opportunities to profit for 2016. Learn more by visiting futuremoneytrends.com/smartmoney.
Hello, everyone, and welcome in to crushthestreet.com. We got a returning guest today, and we got quite a few things to talk about. We need to discuss the GDP number, what the Fed is going to do, and how precious metals could potentially react in this environment. And I couldn't think of a better person to talk to this about than Gwen Preston of resourcemaven.ca. And she is the resource maven. She's been on this show before, and she specializes in mining as a mining journalist. And she's an expert in the mining sector. She recently put on a conference, and I was just talking with her prior to the interview about, the conference and just the sentiment that is in the junior market at the moment is totally shifting. And again, we have a few things to talk about today, but first of all, Gwen, thanks for joining me.
Thanks very much for having me.
Gwen, moments ago, the BEA reported that in its first revision of Q1 growth, the U.S. economy grew at only 0.8% annualized, a modest rebound from the original GDP report, however, still missing consensus estimates. But, quite frankly, still abysmal growth. And this is an important number here, and a lot of implications on, what could happen, the Fed decision, and how gold will react. Now, first of all, is the Fed against the wall here with a sensitive stock market and a weak economy?
The Fed has been somewhat against the wall for a while. I mean, the Fed is in a tough position. I do not envy Janet Yellen. What are they going to do? I have completely given up trying to predict what will happen in the middle of June. I had predictions prior, but I've basically given up. I can convince myself both ways. I can convince myself that the economy is showing the signs that they're specifically looking for of some improvement, like employment numbers, the way they look at them, at least looking better, and certain economic indicators looking better, and that encouraging, them to raise rates. Things like last week we saw new home sales were up 16%. Month over month, which sounded very dramatic, and gold sort of came off a lot on that because it looked like a bullish economic number, and bullish economic numbers mean Janet Yellen is going to raise rates. But then, what do new home sales really mean? Like, new homes make up 10% of the housing market. It's not actually that significant number. To me, it was quite an overreaction. And the bigger picture scenario is what you're talking about here, which is GDP growth is still fairly terrible, whether it's 0.5% or 0.8%. That's a pretty pathetic number when we've just had all of these years of, supportive monetary policy that was supposed to really help America's economy get back on track. So in that big picture context, the U.S. economy is not doing anything that is does not look particularly strong to me. So what's Janet Yellen going to do? I don't know. What does it mean for gold? The funny thing is that I've kind of come to the conclusion that it doesn't matter whether the Fed raises rates or not. To me, what matters more is a couple factors. First of all, we have, in the global economy, we have a huge number of dollars and countries that are in negative real rate environments. Now, negative real rates are, above all else, the driver for gold. If you can't make money holding money, then you make money holding gold. That's how that works. And so much of the world is in a negative real rate environment. Even if America raises their rates a tiny bit, which is all it would be, their rates are still going to be pretty close to zero. Like it's not a significant difference. And the momentum towards gold from the rest of the world being in that negative rate environment will be very significant to wash over the slightly positive rate that might be in America. And then the other side of it is the U.S. markets, which, two things there. They are overvalued, or valuations are stretched on just about any metric that you look at. And secondly, after 6 years of bull market, investors got very used to their portfolios doing well without, having to be too worried about them. Now we've had almost 2 years of pretty much sideways action in the S&P. That is not very satisfying, and it certainly does not feel very good to an investor who wants security and value. So whether you believe that America is going into a recession or not, whether you believe the markets are about to turn down dramatically or not, you're not getting what you used to be getting out of your portfolio. So you're going to look somewhere else for that security and value. And if the rest of the world's moving towards gold, America will go along with it. And that rotation into gold is really what matters.
Well, I couldn't agree with you more there, and it does make sense. Either way, the scenario looks very positively for gold and for precious metals for that matter. But to be fair, looking back in December 2015, the Fed did tighten, and you can see what happened, following that. In January, February, gold saw, one of the biggest months it has seen in, a few years, and it was a big move even after they did tighten. So it's kind of a weird dynamic that, the threat of the Fed tightening interest rates is actually going to send gold lower. So considering what we just saw here in this year alone. So any more thoughts on that?
Yeah, I think sort of broadly what's happening there is that after all of these years where the market was just fueled by federal monetary policy, the markets rose, the dollar rose based on, more support from the Federal Reserve. I think we're resetting slightly now because the markets have been basically flat for 2 years. I think what we're doing is resetting to markets that react to economic reality instead of just reacting to monetary policy. And so if economic reality is uncertain or sideways at best, then hopefully the realization that, a 25 basis point change in the interest rate doesn't really matter. What matters is what's actually going on with the economy in America and with the global economy. And in that scenario, it makes a little bit more sense that gold responded the way that it did in January, February, regardless of what the Fed had done with interest rates just prior. What was happening is the markets were responding to investors were shifting into gold because of broad economic reality as opposed to some details of monetary policy in one country.
Gwen, I want to move over into uranium, and uranium's been very interesting and has largely lagged gold and silver, and we did see silver lag gold this year, and then it made quite a significant comeback and caught up to gold. And I'm wondering your thoughts on uranium, if we're going to see precious metals pull uranium up with it here in the upcoming future, because I know a lot of people are concerned about it and they're wondering, what is going on with this commodity and where's the opportunity here?
Absolutely. I'm wondering the same, but I do have some thoughts to that question. Will gold and silver pull uranium up? I don't see that happening. I see with uranium, it's a different enough market. Once it gets going, then it's as a second or third commodity participating in a mining bull market. It can strengthen the overall equity rally. But I don't think it's going to start going because of any pull from another part of the mining sector. What needs to happen with uranium is that nuclear operators need to start signing new long-term contracts. So the way that it happens is usually nuclear reactors do not ever play around with running out of uranium. That's what causes reactors to melt down, which is really to be avoided. So generally, operators make sure that they have enough uranium supply covered for at least 3 years, and perhaps quite a few years more than that. They've got those contracts signed. Right now, globally, operators are looking 3 years ahead, and they do not have their normal bases covered. The reason is that there's been all this extra uranium sloshing around in the spot market because Japan is not consuming the way that it did before Fukushima. And so they've been able to pick up this cheap spot uranium left and right. The reason that that's going to change is that uranium has been depressed for long enough. New mines are not coming online. If you look out to 2019 or 2020, depending on exactly which numbers you use, you start to see a very significant supply gap develop. And the precise thing that operators will not let themselves get in the position of is getting to the point where that supply gap threatens their nuclear reactors. That supply gap is now only 3 years away, right? 3.5 years away, and that's that specific time frame that they usually make sure they have covered. So, at some point soon, there's a bit of a face-off going on right now, where operators are sort of who's going to go first, who's going to go and sign the first, dive into the conversations and sign the first long-term contract. But at some point, and I'm still optimistic that this will happen this year, perhaps in the fall, one operator is going to take the plunge. They're just going to be like, you know what, I would value security over a little bit of price advantage in the near term, especially because uranium actually represents quite a small fraction of their operating costs. And the first contractors are going to go in there and they're going to sign supply contracts. Those contracts are going to be at a stronger price than the market might expect because producers are going to demand a stronger price so that they have a chance of building new mines. And then I think that will trigger a flood of new contracts, which will support the spot price and the long-term price, and that'll be the catalyst that will start uranium moving forward because the fundamentals are very strong. There's just this spot supply excess right now that's sloshing around and sort of slowing things down.
Yeah, and it really takes that overcoming of the emotions to get into something like uranium now. But I gotta wonder if seeing gold and silver start to make its run, if others are getting the confidence like, hey, this hasn't ignited yet. The opportunity is still very much here in uranium, and just the confidence like, hey, precious metals are going and the juniors related to those are significantly moving higher. And even this pullback that we've seen this last week, I can only imagine how much money is now going to enter that has been on the sidelines, like saying, hey, this is the opportunity. This is the opportunity we wanted because it's moved up so much and I didn't want to buy while it was going up, parabolically, but now it's corrected some, and here is an opportunity for me to get off the sidelines and be a part of this upward momentum. But getting into uranium, this is catching the bottom if we do see it turn around here.
Absolutely, and I think we are seeing that, interestingly. So two comments there. First, I do actually these days quite regularly from my subscribers get questions about uranium. So just like you said, the upward, the new excitement back into gold and silver is making them think about, well, what other sectors are there that will move next, and can I position now to be ready for that so I can get in ahead? So for sure, investors are already thinking about that, which is great. And we've already seen quite a few, they haven't moved to the degree that gold explorers or developers have moved, but certainly some uranium explorers have moved up quite nicely in the last few months, even though the price of uranium has done nothing. If anything, it's slid a bit. So yeah, there's definitely an expectation that this is going to happen, and investors want to get ready for it. And as they should, because whether the price starts to move tomorrow or whether it starts to move at the beginning of next year, it absolutely will move. There are more nuclear reactors being built and planned right now than there were before the Fukushima disaster. Nuclear build-out has not slowed down; it has sped up. But uranium production is not ready to meet it. So it's a bullish long-term market. So getting in now makes sense, and investors are certainly seeing that.
Gwen, I want to ask you about the conference that you recently put on, and just kind of give us for those who weren't there, the feel in the room, and was it different than, say, what you've put on and you were a part of in 2015, 2014, 2013. What is different in the air now in 2016 and, referencing what you saw at your conference?
For sure. So, the obvious difference is the price of gold, but the more, what's really great is people who come to the type of conference that I put on, which is where I get together with these fellow newsletter writers and we invite our favorite investment idea companies to come and present, and we invite our subscribers to come and listen. The audience is made up of, people who really believe in investing in the commodity space. And so these people generally, have a pretty solid understanding of the fact that commodities are very cyclical and they come and go and you have to be patient and wait till the bottom comes back and then you can ride the wave again. And now that's happening. So all of their patience, and certainly quite a few of them lost money, everyone lost money in the bear market, but the chance to do it again, everybody sees that. Everybody's so excited about it. It really adds a lot of new energy to the sector. And what I think is there's a really wide base of support that's driving that interest. So it's not just the gold prices increase. It's that some of the famous investors in our sector, the Frank Justros, the Ross Beatties, the Lucas Sundins, are putting major dollars behind their investment ideas. They are clearly saying, we're at the bottom and we're positioning for the move up. Alongside those, we have a pretty wide suite of generalist investors who are also out there loud and proud saying, gold is where I want to be, given the uncertain economic and negative real rate environment in the world. So we have George Soros and Stan Druckenmiller and people like that who are out there saying gold is where it is. Then you have these hedge funds who are also looking around and seeing a lot of uncertainty, a lot of lack of opportunity in some of the trades that they usually make, whether it's in the overvalued U.S. stock market or whether it's in currencies because of the strange things that are going on with negative rates. And these funds are seeing gold as a hedge to all of that. So they're moving into gold. So there's this broad suite of investors who are quite significant types of investors who are moving into gold. So when the dedicated retail resource investor sees that, it just gives you so much more confidence that even right now, when we're in the midst of a little bit of a gold correction down from its peak at the beginning of May, everybody still has confidence that this is just that, a little correction, and that the broad trend remains upwards. And that just creates a whole lot of excitement, and everyone's looking around for which opportunities make the most sense to them.
Mm. Yeah, no, it is a very exciting time, and one of the things that I've been thinking about is, the timeline of the bull market, and at a certain point, we know it's going to go into that euphoric stage. It's going to just go parabolically, exponentially up, and people are going to be buying in that time. But at a certain point, obviously, there's going to be a lot of risk entering the sector. And I'm wondering, it's just, I personally, I think we're way below the collapse point. But I'm wondering, are we buying at essentially risk-free levels even after we see that parabolic move up and it does collapse? Do you think we're still below where the chips will settle after everything goes up and then makes its big, sell-off?
Oh, I think that's pretty impossible to predict at this point since we're so early in this bull market. It's very, it's impossible to know just how high it will go and what that will all play out as. But really, what matters is that if you want to make money in the stock market, you need to get in generally low and then get out generally high. So details about whether we're precisely at the bottom right now or, fretting over the fact that you missed the first move in the gold market, or for that matter, wondering whether to hold onto your stocks that are up 150% or whether to sell. What you want to do is buy when things are cheap. If you make good money on something, take some of your money off the table to lower your risk. The best money in a mining bull market is made by getting in early and getting out not too late, right? So it's all about keeping it in context. I don't know whether the next decline, which I hope is years from now, will bring us down this low again. I have no idea. But to me right now, it doesn't really matter. What matters is we're at the beginning of it. We're still in the early stages of a new opportunity. That opportunity, I think, will be quite significant. Broadly speaking, we're still at the bottom. There's a lot of upside to come. And as long as you manage your risk on the upside, because every upswing has its correction, as long as you manage your risk on the upside, then there's a lot of money to be made in this market.
Well, everyone, that's Gwen Preston, and if you enjoyed our conversation today, there's much more from her at her website, resourcemaven.ca. Gwen, is there anything else that you'd like to share about your website and the work that you do?
Sure, yeah. So I write a weekly newsletter that talks about what I'm buying and selling and thinking in the metals and mining space. So it's I usually talk about some macro issues. I talk about interesting news from the sector and why it matters. I talk about what I'm hearing when I'm through my network of contacts in the mining scene and why that's interesting. And you can sign up for a free trial if you want to check out what that subscription looks like.
All right, Gwen. Well, thank you so much for coming on the show, and I really do appreciate it, and I look forward to future conversations.
Likewise. Thanks very much.